Good afternoon. A question I've been getting a lot lately is, are we in a housing bubble? Today's topic of discussion, I'm going to be going through the 3 key points that indicate me to believe we are not currently in a housing bubble. This is Dale Snyder with the Snyder Group at Keller Williams Realty here in Las Vegas, Nevada. Let's get started. So, point 1. The pricing makes sense. So if it makes sense, then therefore, to me, it should be sustainable. Let me explain a little more. Prices have come up about 35% in the last year or so. That in itself makes people believe, wow, it's a bubble, right? Because how can prices go up so much in 1 year's time? Well, remember, we dropped 70% off the peak. That is a huge drop. So if you look at the trend line, the 40-year historical trend line, we are still below the price point of where we should be on the housing market here in Las Vegas. Also important to note is, looking at the affordability. The affordability of homes in Las Vegas makes sense right now. Even if interest rates were to go up a couple points, right now we're at about 4%, we were in the low 3s. You get a home at $150,000, $200,000, $300,000 and have dual income, or even a single mom with a couple kids can afford a home in Las Vegas, it makes sense. So the prices all make sense right now. And also, look at the lender restrictions. It is so difficult to get a loan right now. They're making sure that you can afford this property. And then over 50%, as many as 60% of our buyers are paying cash. And this just isn't investors. We sell a lot of homes every month, and a good percentage of those are owner-occupied cash buyers. So we're in a very strong market in the sense of the buyers that are buying. It's none of these no-doc loans anymore like we used to see where anybody could get a loan without disclosing any documentation. Number 2, which is a big one, is the shadow inventory. I'm sure you've had conversations about it a dozen times this year alone about the shadow inventory and what's going on with it, right? Well, there's projected about 50,000 homes left to go through some sort of foreclosure, loan modification, or short sale in the valley. Let me explain to you something here as far as our healthy market. A 5 to 6 month supply of inventory is a healthy market. Right now, we have a 1 to 1.4 month supply of inventory. In Las Vegas, that means about 20,000 homes on the market is about a healthy market based on the historical data. If the banks were to bring on about 10, 15,000 homes to our market, that would put us into a healthy market. They're not going to do that, of course. They're going to slowly trickle them out, but we have a very low supply of inventory right now. A lot of that's due to AB 284 and then the revision that's come, AB 300, which I'm not going to go into detail, but if you'd like more information about that, if you do not understand those laws, make sure to watch this video, and at the end there will be a link to those videos so you can better understand them. Another important note on the absorption of the shadow inventory, we could sell about 15 to 20% more homes than we currently are selling. We just don't have the inventory. So if the banks would bring more on, we would absorb them. We're about 20% below what our current sales are. And another important note, investors are not the only ones in our marketplace. For every home that we sell, especially in that lower to middle price range, a lot of times the investors are getting them because they're paying cash, right? But that leaves several conventional owner-occupied buyers without a home. So we believe that as these investors dissipate out of the market, they are going to be backfilled by the millennial buyers and the move-up buyers to help absorb this supply of distressed homes that are left in the marketplace. Number 3 is going to be the momentum. We have massive momentum locally, nationally, and globally right now in the economy. And the reason I say globally is Vegas is so tied globally as an economy to help drive our market. So let me quickly just touch on some local data. We're the 6th fastest growing metropolitan area in the nation right now, which is pretty astonishing considering our unemployment rate is still 2% higher than the national average. we still are one of the fastest growing metropolitan areas. And our unemployment has gone down by 4.4%. So we're slowly inching down on that unemployment rate. And if you look at all of the growth we're seeing here in the city, Echelon was just purchased up by a Malaysian investor. $7 billion are going to be investing into the Echelon project. We've got Dynasty. We've got Resort World. I mean, right now there's $2 billion in construction taking place right now on the Strip. If you drive around the valley, you're going to see a lot of commercial projects being built right now. Zappos, the billionaire owner of Zappos is investing heavily in the downtown project. We've got 2 water parks that opened, the Red Rock area, the casino, the outdoor shopping center that we've been waiting on. Macy's signed on as an anchor tenant. That's moving forward. A lot of the major metropolitan areas nationally are, they're thriving again, and that drives people back to the Las Vegas market for the entertainment. Travel and tourism is doing well again. So there are a lot of indicators that the momentum is so strong right now that it's not going to be reversed. So, in summary, if you're considering selling, it's obviously going to depend on the price point, location, and your personal needs. I'd suggest you reach out to me. We can have an educated, informative conversation about what, we feel would be the best strategic placement for you in the market. If you're a buyer, I wouldn't be concerned about the bubble. As the data indicates, and as my gut on it is telling me, we are not in a bubble. It's a very sustainable market that we're in. And also, in closing, many people projected that the hardest hit markets in the country were going to snap back the strongest, right? Well, if you look at Arizona and Nevada, 2 of the hardest hit markets, they have snapped back the strongest, which makes sense, right? Because we dropped the most, so we should snap back sooner. I hope this information was of value to you. It's Dale Snyder with the Snyder Group at Keller Williams Realty. Feel free to reach out to me to have an educated conversation on the Las Vegas real estate market. Have a fantastic day.